my portfolio. Pimp my portfolio.
That's right. It is this time where we bring in a community member and an expert and get the community member's portfolio reviewed. And today we have, for the first time for Pimp My Portfolio, but not for the first time on Equity Mates, Charlie Viola. Charlie, welcome.
G'day, boys. How are you?
Yeah, we are well.
We're excited to have you for this segment, Charlie.
Yes.
Yeah, actually, I'm a bit nervous.
Are you?
Yeah. It's like, I obviously do this for a living,
Yeah.
but not in front of a whole bunch of people.
You're
It's
literally one of Australia's top-rated advisors. I think we're really excited for this. And on the line, we have community member Steph. Steph, how are you?
Hey, good, thanks. How you going?
Thank you for submitting your portfolio. So, Ren, do you want to kick off? What's in Steph's portfolio?
Yeah, so Steph has a portfolio. She's got 7 ETFs and 6 individual stocks. I would hazard a guess, Steph, that it's a bit of a core and satellite approach, with the ETFs making just shy of 90% of the portfolio, and then the individual stocks being the remaining sort of 12 or 13%. Some of the bigger ETFs, we've got Vanguard International Shares, we've got Vanguard Australian Shares, we've got the iShares S&P 500, and then a few more after that. In terms of individual stocks, a lot of Aussie names: Commonwealth Bank, Computershare, Treasury Wines, Westpac, Woodside, and Whitehaven. So, Steph, we'll ask you how this portfolio came to be, but before then, Charlie, do you have any initial thoughts on the portfolio?
Yeah, Steph, do you want a job? I must confess, this is actually really pretty bloody good, to be honest. The way that
really?
The way that you've put this,
Dear.
whether kind of by accident or by design, you sort of 50-50 global and domestic, and again, I don't even know if you've done this on purpose, but even when I look through your kind of direct exposures, you've got kind of exposure to banks, tech, energy, consumer discretionary, resources. It's all like a really good split. So like my first thing is like, this is actually really well done.
All right, we'll segment over.
Sure.
Well, Steph, with that in mind, maybe if you can shed a bit of light on actually how the portfolio came to be and where you're currently at with it.
Yeah, sure. So I fear I'm going to sound probably more wealthy than I am. I just happen to be surrounded by people that are kind of financially in the know a little bit. So for a long time, my mum was encouraging me to invest in shares and things like that. And then she sort of pushed me by, as a birthday gift, buying me a couple of shares in CommBank, and I think it would have been Woodside. So she got me started with that, and I kind of just like watched them grow over a couple of months. So I was like, oh, okay, this isn't as scary as I thought it was going to be. So watching the CommBank and the Woodside ones and just kind of getting familiar with the feeling of seeing things go up and down. I was using like Morningstar and stuff, and just sort of went with shares that were undervalued, which happened to be Computershare, Treasury Wines. There was like a trade happening or they were changing the trade deals or something at the time, and I just sort of, it was kind of specky because I was like, oh, I know that trade deal is going to go through, like I'm going to invest now because the stock is undervalued at the moment. Unfortunately, Whitehaven Coal, that was a specky one too. I mean, $1 or something a share. And I was like, oh, coal, that's going to go out the window at some time, and then they'll have to transition to like a renewable energy. And then they got a new deal, and they've got like a new site being built, etc. And that ended up being one of my best performing stocks, because they'll definitely continue to produce coal. So yeah, those all went well for like a year or two. And then I started listening to Equity Mates more, asking a few more of my friends and my partner at the time about like the stock market, etc. Listened to Get Started Investing by Equity Mates. I've got an understanding of ETFs and realized I should probably be investing in those instead of singular stocks. And yeah, from the Get Started Investing as well, kind of sharing it around. That's what the FTSE was about, trying to get in on the UK stock market, S&P 500, obviously, NASDAQ. I just liked the way that was performing. I know there's probably quite a bit of overlap with S&P and NASDAQ, but I was tempted by the big numbers. And then, yeah, VAS and Vanguard International, all that kind of thing. That's from there as well. The high yield one Vanguard High Yield. That was supposed to be like almost like a blue chip or like my stable one, but I really didn't like the way that was performing, so I just stopped adding to it and have just let it coast where it's at.
Nice.
Well,
Good summary.
Yeah, a lot to unpack there. I love the fact that you came across Equity Mates and you started investing in ETFs. It's, it's good to hear. But I guess, Charlie, from all of that, do you have any initial takeaways or any initial thoughts on where this portfolio could go?
Yeah, so firstly, it's a really good lesson, isn't it, in terms of kind of doing a bit of research and doing a review and having a look at, where value is at and what valuations might kind of look like, and finding resources like Equity Mates. I mean, I think the Equity Mates commercial can be over now, but the
Never over, Charlie. It's never over.
Morningstar and what have you. So it's a good lesson to investors, especially people kind of starting out, in terms of how to kind of put these portfolios together. It's really hard to be critical of this portfolio. I would say the only one, you've probably already highlighted it, the bits that I think that you could probably pull out of this and kind of make a couple of the other positions more material, to be honest, a VHY. We're not a big fan of VHY, which is the Vanguard High Yield. It obviously just goes and finds the biggest dividend paying stocks with no real kind of consideration for value. Honestly, you might as well just keep tipping that money into VAS or the other kind of broad-based ETFs. And then the other one is VDHG, which is the Vanguard Diversified High Growth Fund. It just kind of dilutes the message a little bit in terms of, when you're investing in that one, because you've actually covering all of the other things in the other stocks that you've got, or in the other ETFs that you've got. So, I would probably cull those two out. I'd increase the amount that you've got in, VAS and IVV, or even sort of NDQ if you kind of, like the tech space. In terms of the direct stuff that you've got in there, I think Whitehaven Coal has probably got some room to run. I think, Woodside is probably the same. I think the banks are probably maybe a little bit overvalued now, but, kind of long term, they're absolutely fine, and they'll continue to do reasonably well, especially the ones that you're holding in terms of, CBA and Westpac. We're not a massive fan of Computershare, if I'm really honest, but, it's got a huge amount of market share. But I think as that sort of space becomes far more competitive and new registries come to market, I think I'd probably happily take the winnings there and maybe, stick that money into the kind of broad-based ETFs, especially if this is now kind of the set and forget portfolio.
Yeah,
but,
pretty much. That was my goal.
Yeah, honestly, you've done an exceptional job putting it together. There's bits and pieces of changes, but not heaps, if I'm really honest.
Love that. Well, Steph, are you still actively investing into it at the moment, or is this something that you just want to have ticking away?
So I was actively investing up until, 3 months ago, and I sort of started to get a little bit like overthinking my portfolio and going, I don't know whether to keep investing in VAS and VGS. Like, I was actively investing in those. The rest I was just kind of letting sit, occasionally putting into S&P 500. And I thought, okay, well, if I can't make a decision, then just like cool the brakes for now. And now I'm doing salary sacrificing additional contributions into my super. So the plan was that I'd do that additional contributions for like 12 months, see how I feel, and then either keep doing that or start adding to my investment portfolio again, mostly just into the ETFs. And it's pretty much because of salary sacrificing, like the amount that I was setting aside to invest into ETFs, it's like exactly what is now going into my super under salary sacrifice, but like an extra $150 or something because of the tax concession. So it sort of felt like free money doing that for 12 months as well. Which again, not to, hammer it home, but like after listening to the super episodes from the podcast, I finally was like, okay, now I understand why people salary sacrifice into super. So yeah.
Well, I think after Charlie's comments, if you ever do switch it back, or at least try and do perhaps both as well, because you would have heard that we're strong proponents of trying to also build the portfolio outside of super as much as you can as well. I think you've certainly got a portfolio there that is set up for a decent DCA strategy anyway. So
yeah, I agree.
Yeah,
I mean,
it was
and I think
reassuring to hear. the approach that I was taking was sort of the right one anyway, because I had stopped investing into VHY and diversified high growth. I'd sort of stopped actively investing into those and was focused more on VAS and VGS. So it is reassuring to hear that I was making probably a good choice.
Yeah, I mean, they're absolutely the two that, if you were just if you're adding small amounts to, that you'd be adding small amounts to every month. They're the most diversified, broad-based exposures, and you'll obviously get the benefits of that kind of dollar cost averaging over time. And in reality, if you've got control of your super monies as well, this wouldn't be the worst sort of long-term super portfolio either. So if you're doing the exact same thing into super, then this mix and this type of portfolio is going to generate good outcomes over the long term, especially if you're kind of adding to it on a regular basis.
Nice.
Good,
Wow.
good.
Well, you've set the bar high for everyone else who comes in afterwards, Steph. So look, we'll leave it there. Thank you so much for submitting your portfolio. I hope you took something out of that. And Charlie, thank you so much for sharing your thoughts with Steph.
Awesome. Thanks so much, guys.
Well, if you would like to submit to Pimp My Portfolio, head to equitymates.com/contact. All the information is there. But yes, Charlie, once again, great way to kick off. Thank you so much.
No worries.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.